Hey traders, hope you all having an awesome weekend. So before I continue, if you are someone who don't want to listen this part of the video, then you can skip it to the timestamp you will see in next 30 seconds, because I don't want to take much of your precious time if you don't want to listen this part. But if you're someone who wants to listen this part of the video, then trust me guys, it's going to be really beneficial for you, because I'm going to show you how we take the trades. And I got lots of feedback from traders who have been watching me from last couple of years, and they said that they can able to make money in financial market just by watching free content, and now they do less mistake than they used to. So in this weekend's video, I'm going to show you how we enter the trade using this area of values. I'm going to show you the commodities, the zones I've sent to my members, and these are the zones I always show on my free YouTube videos as well. And I'm going to show you the one forex pair and one indices, Nasdaq 100, the way we enter the trade with conditions, and few trades I took and how it tested my patience as well. So I'm going to show you all this in the first part of the video. Now let's start with the commodities report I've sent to the members. Let's start with natural gas. So as you can see here, I've already informed my members that the price is now inside the level of trend continuation zones. And if you know that trend continuation zones are the zones that is broken, that was previously a resistance, and that can likely act as a support and possibly push the price higher. So that is what we were looking at this trend continuation zone. I'm also going to show you the zones that did not work out. If there is no condition, how badly it can go against you. So as you can see, the price was right here, and we were looking for a condition. If the price pulls back, forms a good reason to enter. And if you see a condition here, right here, we had a nice bullish engulfing candle. We also had a pin buy. If you are an aggressive trader, you could have got a very good target if you entered few pips above or at this pin bar. Risk to reward ratio would have been better. So what we entered here in a less aggressive way, and then the price hit the take profit and then quickly falls. But the goal is to take some profits, manage it if you can. Otherwise, if you want to take a fixed target, take it and look for the next opportunity. So this is the first commodity we had here in the report. Next one, we have wheat right here. So I've already informed my members that I'll be looking to enter my buy trades if the price hit my zone, and what we need to see a good condition to enter the trade. And right here on your right, if you see here, what do we had after the price hit my zone? We had a nice bullish engulfing pattern, and that is my entry. And as you can see, the target of 1.421 risk to reward ratio has been hit. So that is how we enter the trade with conditions, and that is how you can make money in a financial market, just by being patient and by being disciplined, not just by looking at the zone and you start buying without any sort of conditions. So let's look at the next one. Right here we have corn. I've already mentioned my members that we'll be entering the trade once the price hit the level below in green. Now this is the example I want to show you. Even though the price pushed up nicely and 90% of the time my zones reacted positively, but I always look for the conditions. Now this is a good example of that. We have a good head and shoulder pattern as well. Right here if you see a nice head and shoulder pattern with this bullish engulfer, and price is now pushing up. But I wouldn't enter with an aggressive entry, as do not see any sort of good reason to enter right here. This is a bullish engulfer, but that invalidates one of my rule. But it did push up from the zone I've mentioned. I've sent the other commodities like copper, gold, crude oil, and some reacted and some are still in the zones. We are paying attention for next weeks. Right here, one forex pair. I'm going to show you the other forex pairs are still heading towards the zones or are inside the zones. That is why I just want to show you this one that has reacted nicely from my zone. Right here, GBP, JPY, as you can see, I've already sent these zones to my members from last couple of weeks. I've been sending these zones, and right here, what do we have? A nice double top engulfing pattern. Right here, we had on 1 hour time frame, and we had an entry at the close of this candle, and as you can see, the target of 1.421 risk to reward ratio has been hit nicely, and that is how we entered this trade with condition. And priority group is not a magic group, it's not a signal group. I want you guys to learn out of these group. I want you guys to look at the conditions entry so that able to make money in the financial market. I want to show you this pair as well. I've already sent this zone to my members, but right here I did not see a very good condition to enter my sell trade. That is why I chose not to enter. And this, as you can see, if you just entered blindly here, the price has massively pushed up here, and that would be lots of loss. And always trade with stop loss and take profit both. So the last one I want to show you the indices report of Nasdaq 100. I've sent the other indices, but the price is still not in the zones or still heading towards those zones. This is the one I got an opportunity to take a trade because it hit the zone and it meets the condition. And as you can see, the price was below the zone. I've already mentioned my members that once the price pulls back to this zone, I will enter my trade with conditions on smaller time frame. So that is what we had, and as you can see, the price broke below the zone and we had a pullback as mentioned in the report, followed by a nice bearish engulfing candle, and as you can see, a nice fall of the red candles. That is enough to hit your target, and that is good amount of profit if you would have entered this trade. And if you follow me on YouTube, you can able to spot these entries as well. So that is how we enter the trade, with conditions only. These are the counter trades which we take from the zones here, major zones, major support and resistance or supply or demand zone, but they are the trades we take in between the zone, which I call a pullback entry. That is what I want to show you. I've sent 2 trade alerts to my members right here on the screens. As you can see, the Euro Japanese yen, we took this trade when the price was broken above, was trading above 50 EMA, nicely in a trend upwards, and we had all the condition met. We had a nice swing low bullish engulfing candle, and with that a nice take profit of 68 pips has been hit. The next one, we had Canada Japanese yen, and as you can see right here on the screens, we entered the trade at the better price. Right here we got a chance to enter this trade below the engulfing candle, and that is how I entered my trade. I kept my take profit a little bit up below this top because I knew that it was likely the price is gonna fall back from here, because we had this level as a good level of resistance. That is why I chose to keep my take profit a little bit below, and it played out nicely, hit 34 pips take profit, and then price quickly falls down. Now, these are the trades I've sent to my members, but I took my personal trades as well because I use the other strategy which I can't show in a single video. This is something my MMTA course students are learning, and they have a full rules for that. But I want to show you this trade I've sent on my free Telegram channel right here, as you can see on the screen. And this was the opposite of bullish trending market. We had a bearish trending market, and we had a good condition right here, a bearish engulfer. And as you can see, a target has been hit for this one as well, and exactly the same condition I want to show you right here. NZD USD, I've taken this trade myself, and that also hit my take profit nicely. These 2 trades I have not sent in my priority group. Like I said, it is not a signal group. Sometimes I send 4 trade alerts, 5 trade alerts, depends how the market is moving, and sometimes I send only 2. Like last week I sent 2, before that I sent 2, and 1 I've sent in my free Telegram channel as well. So that is why I want you guys to learn, look at the pattern, and DM me if you have any confusion, so that you can able to take your trades independently rather than just relying on blind signals. So I want to show you this trade I've sent in my priority group last week, not this week, the week before, and that really tested my patience. Now imagine if you are not disciplined. What we had a condition of pullback entry, and as you can see, the price push up, then came back to my entry point, then push up, then pull back down, and as you can see, the price was just moving sideways, doing nothing, and that was a long trade, and that took 5 days to hit my take profit. And this is the trade that tested my patience, and that is even nothing. There are some trades that took weeks to hit my take profit, but I did not get panic when the price pushes back down. I was waiting. Once I click my buy or sell button, then it hit my take profit or it hit my stop loss. That is my rule, and that is how you can make money, because you are ready to take full loss, but you are not ready to take full profit or better profit. And that is a psychology we need to fix and understand, that in trading we need to have a good risk to reward ratio. It doesn't matter if your winning trades are 4 or your losing trades are 6 out of 10. You'll be still in profit if your 4 winning trades has a better reward than risk. If you manage those trades, then trust me guys, you'll still be in profit without any doubt. The last one I want to show you, this trade has tested my patience and been pain in the ass, because I've entered here right here, and as you can see, the price pushed up almost there, hitting my take profit, and then quickly falls back down. It also formed the bearish engulfer, but that would be entry as well, a good entry, and that would be a take profit hit as well for the sell trade, but I chose not to enter because I was already in my buy trade. And it's been like few weeks now, I'm still in the trade and it is still running, and let's see how it goes. If it goes hit my take profit, that's awesome. If it hit my stop loss, that is fine, I'm prepared for that. That is why you need to be patient when you are ready to hit the financial market. So that's it I want to talk about. I hope you learned something out of it, and I hope you're getting value out of my content, which I upload every single day. If yes, do not forget to hit the like button before moving to the next part of this video, where I'm going to do analysis of net gas, gold, silver, and crude oil, starting with natural gas. And what do we have right here? And before that, let me show you what I've said in my last video, so that you can understand conditions and entries. What we can do, we can pull up Fibonacci tool from the swing low of this candle to the zone right up there. Now all you need to see, look for the pullback to 50% retracement, it can still go up to 25% retracement, but you can set your order at 50% retracement, which can be your sell limit order. Target can be 1 ATR initially, and then you can manage it to the recent level of support. So what do we have? Right here, price pullback from here as expected and hit our buffer zone. If you're an aggressive trader, then this wick is your entry. Right here, targets can be 1 ATR, or you can manage it till the support. Awesome. So exact move we had from natural gas. I've mentioned that price can hit the buffer zone, and for aggressive traders, this is the perfect entry, and that has played out really nicely, and target of more than 1 ATR has been hit. If you look at it, if you enter, let's say, at 50% retracement, right here the target of 10 points has been hit. ATR of this candle was the candle that hit the 50% retracement, or the buffer zone is 4, and as you can see, the 2 ATR target has been hit easily. For aggressive traders, that is a good take profit, but I chose to enter in a less aggressive way, and I was in the other trades as well. That is why I did not enter the trade, but I'm glad few traders sent me a message that they could able to make money, and they can now understand trading much better than before looking at the analysis I do every single day, and that is what my goal is. Now, I got this question asked a lot, that in last couple of weeks video you said price is now pushing up, it's now likely heading towards the next level of resistance. Well, that was likely at that point, and I also said that I look to enter my buy trades, a signal that we look to enter the buy trades if the price wants to head higher. In this case, what happened is, when the price pushes down in the area of trend continuation support, we had a good bullish engulfer. Now, once my take profit is hit, I exit my trade, because if the price wants to continue to push up in a trend, it must make another high right here, break above the previous high, then I look for another pullback, and then I want to see a good bullish signal. And if the price hit my take profit, let's say here, I want to see another break above this previous high, and then the price will head up. I want to see a pullback, look for my entries, and then I want to see a break of another high. So this is how the uptrend works. Until when? Until the price hit the next level of resistance right up there, and then I will look for the reversal trade with my conditions only. Saying that the price is gonna push up doesn't mean that you put all your money there and start buying like crazy. You need to see a candlestick pattern that talks with us, that tells us that I'm going to push up, and these are the buyers that push the market up, and the buyers combinedly think that the price of this particular asset must be higher, then they push the market higher from the previous high. If the previous high is not broken, they push the market lower, and then the trend is change. So that is what I mean when I say it's bullish. Look for the conditions always to take your trade. Without conditions, we are not trading, we are just gambling. So I hope that makes sense to you. Exactly opposite for bearish trades. Now, as you can see, the price broke below 50 and 20 EMA. I've also mentioned in my previous videos that price is still in an uptrend. If you look at daily time frame, right here, price is still above 50 EMA, and I've also said that I'll be looking to enter my sell trade, and my plan is not to hold on with my sell trade if I get a condition, because price is in an uptrend on higher time frame. So if I get an entry condition on smaller time frame, I'll take my chunk of profit and wait and see if the price wants to continue to push up in a trend or not. So that is what exactly has happened here. We had a take profit hit above 50 EMA on bigger time frame, and on smaller time frame we managed to get some chunk of profits. So if you see on the daily time frame, right here, the price is trending nicely upwards, and if you see here, the price is making new high, a push up, new high, a pullback, a push up, new high, a pullback, a push up, new high, and that can be another corrective or a pullback, and we might get another push up, break above, and price can continue to push up. In a long term, I'm talking about, is still trending higher. And did you see how nicely we've been taking some good chunks of profit here and here with the buy trade, here with the sell trade, and that is how we take profits on smaller time frames. So that is why I'm saying that we are still in an uptrend, but all we want to see are conditions to take an entry, not holding on with that until I see a clear trend on smaller time frame, and then we can carry on to manage our trades. So that is why be very careful with conditions, enter your trades with conditions when you see that. Now, if you ask me what to do next from here, I'll still look for the conditions, sell conditions for now, and that would be, as you can see, we had a break below previous low, and now the pullback has been started. Now if this pullback continues, and if we get a bearish engulfing candle, I will still go short, and that is the reason to enter. I look for only a pullback, a bearish engulfing candle. If the price hit 50 EMA and form bearish engulfing candle, I will still go short. All I want to see, the price forms a bearish engulfer below 50 EMA. Now if the price, let's say, falls in this green zone, which is 2.419, goes up to 2.493, in that case I'll look for my buy trades with conditions like bullish engulfing candles, pin bars or double bottoms. That is what I'm going to look at. Now if we have no condition, let's say the price doesn't make any sort of condition here, I'll still wait. If the price doesn't make any sort of condition of sell here, I'll still wait. Then I want to see how the price action talks with me. If the price dramatically push up, in that case we have a change in trend, of course, because then we have broken above 50 EMA, broken above 20 EMA, we are in an uptrend on bigger time frame. If that happens, we have a good signal that price will pull back and now start to push up in a trend. So I hope that makes sense. If not, please rewind, rewatch this video. I'm sure it can make sense to you. So for now, again, I want to see pullback to continue, maybe hit 50 EMA and forms bearish engulfer. If that happens, I'll still go 1 ATR for my initial target for sell trades. If the price won't make it, or if the price won't form any sort of signal, then we can hit the zone here. I look for bullish engulfers or double bottom conditions. So these are my conditions I'll be looking at throughout the week, next week. And if I see a condition, I will enter my trade. Doesn't matter what. Place my take profit. I will place my stop loss and I will exit my trade in time. Now remember, the price is not trending at this point. It's still ranging in between this area right here. When the price is not trending, I do not manage my trade. I just take the chunk of my profit, exit and look for the next condition. I only manage my trades if the price is trending nicely or hit the counter trading zone after a big, let's say a downtrend, hit the support, and then I go a better risk to reward ratio rather than just going 1-to-1 risk to reward ratio. There's a lot more you need to learn which I can't explain in a single video. So I hope that makes sense to you. Have these zones ready on the chart. The zone above right here, which is a level of resistance. Now I'm going to give you a brand new zone here on net gas, nice and clean, as I was doing zones for the members, as I've already recorded a video uploaded on YouTube scheduled for tomorrow morning, which is Sunday morning, but I was doing the zones for the members and I have to re-upload the video so that you guys won't miss out on these zones for Sunday videos. Right here, the zone up here on Owanda is 2.961, goes up to 3.063, a zone that has been created by the price. And if you see here, this zone has been acted as a good level in the past. The reason I'm paying attention to this zone because the price has pushed down from here recently, then second time here, and that is why this zone has become a level of major resistance. And if you go back in past and see, this zone has acted as a good level of support and resistance both. That is why we need to have these zones on the chart. And the next area from where I'll take my sell trade will be this zone right here in blue with one of the entry condition like bearish engulfers or double top entry condition. Once we have a complete break and close above 50 EMA, then I'll start to look for my pullback entries till we hit the zone above. Right here on capital.com, exactly the same. The new zone here on capital.com is right here in blue. Have these zones in the chart so that you know when to enter your counter trades. So these are the zones I have on my charts. If you have a condition, we are good to go short or long, and I will keep you guys updated with the move every single day. That is why I make a video every single day so that you can learn something out of my analysis and able to take efficient trades. Right here on capital.com, exactly the same condition. All I want to give you a zone, and the zone below is right here in blue. Mark these zones on your charts, and rest everything is same I've just explained. Let's look at gold. Right here, as you can see, if you remember my last video, I've said that I'll still look for a double bottom pattern within this zone. Let me show you what I've said in my last video so that you can understand conditions and entries. Now this is not one of my pullback entry condition. That is a bearish pressure. The way I would enter my trade, I want to see one more red candle must close below this red candle, and then I want to see a pullback, a retest of the zone here right in blue, and then I want to see a candle like this with a pullback. Only then I will take my sell trade. For now, this is just a red candle. We might get a push back up again, or we might not, but only time I want to enter my buy trade if the price forms a double bottom pattern here and it won't close below this previous low right here. If the price rejected forms a nice pin bar or bullish engulfing candle, only then I look for my buy trade. Nice ones. Did we get a move I have mentioned in my last video? Yes, the price is still within this zone, and if you remember, I've mentioned that I'll start to look for my sell trade once I see a good momentum below the zone that has been broken, and we did not get any sort of red candle below this recent red candle right here, the big one. At this point, I won't be entering here, but if we have a next candle that closed as a bullish engulfing candle, in that case, we are good to go long. I keep my stop loss below, take profit 1-to-1 or 1 for now for the initial target, and now I'm not expecting a very big reversals from here. Doesn't mean that you start buying and just think that price is reverse. It can, but I will not do that for commodities for now because price is in a downtrend, trending lower, and we can expect some bounce that can be enough to hit your target, and then price can continue to push down. In a trend, it can push up, hit 50 EMA and forms a nice bearish signal and then keep on pushing down if not reversal. So what I'm looking at a good bullish engulfing candle that engulfs the previous candle, including the wick. If we have that, targets will be 180 initially, and if you want to manage it till 1.2-to-1, 3-to-1, 4-to-1, up to you. So that's what I'm looking at for gold. Gold is broken below. We are still intact with this double bottom pattern. If we have a condition, we are good to go long, but I won't be holding on with my long trades. Remember that. Next one, we have silver. Silver has played out nicely with this double bottom pattern right here. I've mentioned in my last videos, and price has pushed up nicely. Price is still below 50 EMA. All I want to see a complete break above this previous high right here. Once that happens, the price will turn completely bullish and we can have a possible continuation towards the upside. If silver pushes up, it will likely push up the gold as well, and silver looks good to me, positive to me, pushed up nicely, and all I want to see a good break above this high and then a pullback. It will head higher. So I'll give you the zones in my next video, the next level of resistance for gold and silver. For now, just look for the condition. I've already mentioned that for gold and for silver. Wait for the break above this high, then look for the next buying condition. Only not selling silver at this point. Sell only once we have a dramatic fall with some sort of news event or any sort of event. If that happens, we start to look for sell trade only below this previous low. Right, last one we have crude oil. As you can see, the price pushed down. We had a good bullish condition I've mentioned. We had a push up. We had a nice bearish condition, and that would be a stop loss. I can tell that because the ATR is 7.8 and price pushed down around $0.50. That would be a stop loss hit. If you would have entered that, that would be a valid bearish engulfing entry. For now, I just wait and see if the price completely break and close above 50 EMA. If that happens, we'll start to look for buying trades only. If not, price can push down. Look at this bottom right here, and I look for the double bottom entry confirmation. So sell only if we have a break and close below this previous low right here, or if I see a next candle, let's say the next candle closed as a bearish engulfing candle. If that happens, the very next candle I'm looking at, we have a sell signal, because if you see the previous candle, this doji looking candle is a green color. So if we have a red color candle that engulfs the previous one, we have a sell signal, and then price will likely head lower and initial targets will be 180. So that is what I'm looking at for crude oil. So that is it for commodities, guys. If you have made it to the end, you are a star. Do not forget to let me know in a comment section if you have made it to the end. You deserve a salute, like I always say. Hope you trade green rest of the week. See you guys in the next video. Have an awesome weekend. Take care.